Brian Lehrer on WNYC. We're going to turn now to the national as well as local economy. By the way, former Obama national security official, foreign policy official, and speechwriter Ben Rhodes. Some of you know him from the Pod Save podcast. He has a really fascinating new book, and he's going to be our guest coming up in the segment after this. Ben Rhodes coming up. He took excerpts from speeches from the 250 years of the United States. And we've pulled some from, contemporary enough periods that we have the audio, and we're going to discuss what Ben Rhodes sees as some of the most meaningful speeches in American history. And this is a fascinating book, partly because it's not just, this was a great speech and that was a great speech. He's got a thesis about two different kinds of American identity that you can hear in all these different speeches, whether it was Benjamin Franklin or Frederick Douglass or Ronald Reagan or Barack Obama. Those are just four of the actual examples from the book. So Ben Rhodes, and we'll talk to him about some foreign policy questions as well, since that's his area of expertise from the Obama administration, including, how do we end this war with Iran? So that is coming up. Nice vamp there as we got the next guest connected and ready to go. So now we turn to the national and local economy. The national job numbers on Friday, if you missed this, were surprisingly strong considering the oil shocks and tariffs and everything. Surprisingly strong and kicking so many immigrants out of the country. The Bureau of Labor Statistics reports that employers added 172,000 jobs in May, more than double what analysts were expecting. That's the third straight month of better than expected results. But New York City isn't really feeling it. The city's job growth is stalling by various measures. There are some other economic concerns too. Locally, the unemployment rate for the city is still 5.6%. more than a point above the national rate and higher than it was before the COVID-19 pandemic at 5.6%. And the jobs that are being added are disproportionately low wage. Meanwhile, the city actually shed private sector jobs in March, the most recent month for which we have data. And we're going to talk about all this with James Parrott, Senior Fellow and Senior Advisor at the Center for New York City Affairs at the New School. He's been studying these trends closely for many years. James, welcome back to WNYC. Thanks for joining us.
Thank you, Brian. Good to be here.
And listeners, you can help us report this story, particularly about the New York City economy. What are you seeing? What are you feeling? What are you worried about if you're navigating the jobs landscape in any way? 212-433-WNYC, 212-433-9692. Call or text. Can we talk about the national numbers first, James?
Sure.
What I'm seeing, which I kind of mentioned in the intro, if there are fewer immigrants to even take jobs because there's so much deportation, if companies are hurting because of, the price of oil going up and all the ripple effects on companies' bottom lines, if those things are happening, plus the pressure from the tariffs that we've been talking about for more than a year, why is there so much hiring in America?
Well, it's possible we're going to see some of that in the revised numbers that we get in a couple of weeks for March and April in New York City, and we'll get the data for May. So I'm not sure that I would agree with the characterization that job growth is really weak in New York. It's less than what it was a couple of years ago, but that's because we were adding a lot of jobs because of the bounce back from the pandemic, and then there was a slowdown related to the Federal Reserve raising interest rates and so on. Fundamentally, I think the reason for the strength in the labor market that we saw recently is because corporate profits have been really strong at the end of last year and in the first quarter of this year. For the first several months of President Trump's administration, he had such erratic economic policy moves with tariffs up and down, and just an erratic approach to policy overall. I think that it created heightened uncertainty. But what seems to be the case now, even with the what's happening in the Mideast with the Iran war, is that businesses seeing this strong profitability, the market sort of loves corporate profits being up, so the market indexes have been very high, is that people are moving on and they're sort of getting back to business as before, hiring, seeking to not miss out on some economic rebound that's taking place.
So why are corporate profits up with all those same pressures that we mentioned a minute ago?
Well, part of it's because we've seen, considerable growth in economic concentration over the years. We have an economy now where, a handful of big tech companies account for a lot of the market capitalization. Other large companies have been consolidating, growing, exercising more pricing power. That's enabled them to keep profits up. The U.S. economy has been doing relatively better than the European economy and, some of the Asian economies as well. So I think all of that sort of creates a very, a positive outlook in the short run anyway. There's still this, backdrop of a lot of uncertainty related to the Iran war. We saw that, reemerge over the weekend. There's going to be concern for some time with high oil prices, but corporate profits being, what they are, the outlook for Wall Street is pretty strong this year with the prospect of these mega IPOs from SpaceX and Anthropic and OpenAI. That's going to create, further revenue and bonus growth on Wall Street. And that'll be good for New York City and New York State tax revenues, certainly.
So where does New York City fit in?
Well, New York City's employment growth was actually not that bad in 2025. As I indicated a minute ago, it's not quite as rapid as it was in 2024. But New York City did better in terms of net job growth than the United States did. And if you look at the last 6 months of data for which we have numbers for New York City, that is through April, we don't have the May numbers yet, but for the last 6 months, job growth in New York City has been stronger than at the national level. It's almost twice as rapid at the city level as it is at the nation. And while there has been a lot of job growth in home health care in recent years, we also saw that when the revised employment numbers from the State Labor Department came out a few weeks ago, that there was stronger growth in Wall Street, in professional services like legal services and computers, and in private colleges and universities. All sectors where wage levels are up there. They're not low wage. Those are not low wage jobs, certainly. So those sectors have been doing well. So we've had more of a balance of employment growth in the last 6 months than what we had for a period, a year and a half ago.
Interesting. James, Mayor Mamdani is 5 months in and he hasn't released a formal jobs plan. This was the topic of a New York Times article the other day that you were quoted in. His predecessors did so earlier in their terms. What do you think a Mamdani jobs plan specifically needs to address? And do you think his orientation as a democratic socialist is more on fair distribution of wealth in the city and less on growth, and that's why we haven't seen a plan yet?
Well, I do think that the sort of very uneven growth that we've had, and the fact that wages have been growing pretty rapidly, much faster than inflation in high-wage sectors like finance and insurance, tech, professional services, information, and so on, much faster than in the care-related industries, in home health care, child care, the 80,000 workers who work under New York City Human Services contracts, and other low-wage workers in in other services, building services, in restaurants and hotels and so on. Mayor Mamdani is, I think, focusing on the need for higher wages and an increase in the minimum wage is an economic growth policy. The high wage jobs that New York City has and that, really drive a lot of the revenue picture, jobs in finance and tech and so on. Those jobs, what happens here is largely a function of what happens at the national level. And, the stars have aligned in such a way in recent months that job growth in, Wall Street has been positive. The outlook is pretty positive for the rest of this year. But where, we haven't seen enough job growth or enough wage growth really is in the low wage sector. So a policy of raising the minimum wage could redress that. We have to keep in mind a really important lesson from the pre-pandemic period when there was a doubling of the minimum wage between 2013 and 2019 in New York City. That doubling was associated with a period of very rapid across-the-board employment growth. We saw a lot of economic improvement for people at the bottom half of the income distribution. Wages for people in the bottom half rose after adjusting for inflation by 25%. Incomes for people in the bottom half of the income distribution across all race and ethnic groups, whites, Hispanics, blacks, Asians, rose much faster than what they had in the previous 2 decades. Poverty declined at a pace that we haven't seen since the early 1960s. So a lot of very positive, broad economic indicators resulted from that period, from the half dozen years before the pandemic when minimum wages doubled. Then we had a period of stagnation in low wages that continues. There's been no growth after adjusting for inflation for the 2 million low-wage workers in New York City. Meanwhile, workers in high-wage industries have had 15 to 20% inflation-adjusted wage growth. So a policy that focuses on raising wages and improving the quality of jobs, I think, is really sort of gets at the core economic need for New York City.
Well, how does that square with the way you were quoted in that Times article? Because you were quoted saying the city unemployment and poverty rates are still higher than before the pandemic, and slow job growth is a major contributor to the unaffordability crisis. And you added that it is imperative that good quality job growth be priorities for state and city policymakers.
Right.
So It sounds like you want the mayor to double down on attracting high-wage jobs to the city, and that isn't happening enough, and that affects affordability for people in lower-wage jobs. Am I understanding that correctly?
Well, so that quote was, of course, before we saw the national jobs numbers that came out on Friday, which showed a much brighter job picture at the national level, and I expect some of that to be manifest in New York City when we get the more recent data. What I was talking about in terms of high-quality jobs is raising the wage floor to improve wages and the quality of jobs at the low end of the pay spectrum. Mm-hmm. That's where the critical need is for New York City. And given the very positive economic results from the half dozen years before COVID, when we had a doubling of the minimum wage and a host of very positive economic outcomes, we can try and replicate that with a concerted policy to increase the wage floor, putting pressure on companies to be more productive and efficient. That's part of what contributed to these positive economic outcomes from raising the minimum wage. There's a considerable body of research that shows that significant minimum wage increases not only don't reduce employment opportunities, but actually provide a spur to faster employment growth. Because when you increase the money going into the pockets of low-income workers, they're going to turn around and pump every dollar of that back into local economies. That's going to be good for businesses. That's going to increase their sales, their hiring. That's going to support a broader-based economic growth.
Mayor Mamdani campaigned on a multi-year glide up to a $30 minimum wage in New York. Do you think that's realistic?
Well, I don't know what the exact, what the right figure is at this point, but I know that, one of the reasons why low-wage workers have not fared well in the 6 years since 2019 is because we didn't have a significant increase in the minimum wage over that period of time. We got to 2019, and after that, because there was no automatic COLA adjustment in the state's minimum wage, unlike every other major state that's had a higher minimum wage.
Cost of living adjustment upward in the minimum wage to track inflation, yeah.
Right. So we didn't have that. So minimum wage workers lost ground, particularly in this period when we had the highest inflation rate in 40 years. So that was a real setback. So there's a need to correct, the fact that we didn't have a minimum wage increase. New York City used to have the highest minimum wage among large cities in the country. There are 8 or 9 cities at this point that have a higher minimum wage. Seattle has a minimum wage of over $21 an hour. New York City's minimum wage is $17 an hour. We've lost ground to Washington, D.C., to Chicago, to a lot of cities on the West Coast because we've fallen behind in not having the wage floor keep pace with inflation.
As we run out of time, I want to acknowledge that a number of people have called or texted with some version of the same question about that very positive job growth number at the national level that came out Friday for last month. And I'm going to let Brooks in Durham, North Carolina, represent the group. Brooks, you're on WNYC with economist James Parrott. Hello.
Hey, Brian. So the question is, when these numbers came out and surprised everybody at how good they were, I was surprised because I remembered that Trump last year had fired the head of the Bureau of Labor Statistics precisely because the report they released was not as good as he wanted it to be. And so I was surprised I didn't hear anybody bringing that up because I remember at the time there was real concern about what that would mean for the accuracy of statistics going forward. And so I'm just curious if should we be concerned? Should we trust these statistics, and should we be concerned that they are being manipulated? Thanks.
Thank you very much. Do you trust the numbers coming out of the Trump-appointed BLS head?
That's a very good question and very appropriate one. Certainly, economists like myself have been watching the numbers very, very carefully for a hint of anything like the caller suggested, that there may be some manipulation of the data. And so far, we haven't really seen any evidence of that. And if you think about how, a strong jobs report will affect what the Federal Reserve's interest rate policy is, it's more likely that they would raise interest rates rather than lower interest rates, which the president said again over the weekend that he's expecting the Federal Reserve Board to do. So, there's a little bit of dissonance there. I mean, if they were really trying to manipulate the numbers, they did it in the wrong direction.
James Parrott, economist at the New School, senior fellow and senior advisor at the Center for New York City Affairs there. Thanks for some time today and your insights on the local and national economies.
Thank you, Brian.